All right. Well, welcome everybody to our final Aging in Place event of the season. This one is reverse mortgages, ins and outs. Let's see, there we go. You guys all have done the Zoom webinar, I have a feeling. Recording today's webinar, so if anybody misses anything, we'll have this available later. We're also streaming live on Facebook through the Johnson County Social Services Facebook page. Zoom functions, if you have questions, you can put it into the chat, you can put it in the questions and answers. If you're on Facebook, you can just put a comment in there. We're monitoring all those things and we'll get the questions to our presenters today. This webinar is brought to you by the Johnson County Livable Community Housing Action Team, which is composed of Johnson County Livable Community, the Greater Iowa City Area Home Builders Association, the Iowa City Area Association of Realtors, and a lot of other organizations, but those are some of the major players. You can see this is their last one. This was our whole agenda for our 4th Aging in Place series that we've done. You can find all of these if you go to livablecommunity.org. You can also go to the Johnson County website, which is where Livable Community is now housed. But if you use that, it'll redirect you there. You can also get information on our about these events coming up for next year, because we are anticipating that we're going to be doing a 5th series, whether that's in person or strictly through Zoom. We'll stay tuned. We'll find out, with you. But that newsletter will have a lot of information about when that information comes up. And as always, my role here at the county, I'm an aging specialist. I'm happy to answer questions, provide assistance to residents of Johnson County, older adults, caregivers working with an older adult, trying to come up with options that help them out. That's my contact information there. I'm going to stop my share and want to thank Lorraine Bowens. Lorraine is on our housing action team, also as the vice chair of Johnson County Livable Communities, and she is the one who was able to pull together 2 awesome presenters today to talk about reverse mortgages. We have John Gianola, who is our managing attorney with Iowa Legal, not our managing attorney, he is the managing attorney with Iowa Legal Aid. And Tenney is going to be starting us off. He's with Mutual of Omaha. He's a HECM specialist, which is a lot easier to say than home equity conversion mortgage specialist. But Alan, I'll let you take it away and go ahead and try and share your screen there. If you have any problems, let me know.
Okay, I'm going to get started. My name is Alan Tenney, and I'm a HECM specialist, or you can call me a reverse mortgage specialist with Mutual of Omaha. I've been involved with the reverse mortgages since 2000 and 16 years of experience on the lending side. Presently, I'm with Mutual of Omaha Mortgage. Many of you know who Mutual of Omaha is, I hope. But anyway, let's get started on what reverse mortgage is. In retirement, a lot of financial people look at what's called the 3 L's. Longevity. Will I have enough money to meet my living needs in retirement? Lifestyle. Will I have enough money to maintain my living, my standard of living? And liquidity. Will I have access to tax advantage money that I can use in retirement? Many of you will have access to that type of information. So reverse mortgages, what we're going to talk about today is how they work and uses and benefits and myths and facts. So bear with me a second here. First of all, reverse mortgage benefits. It's a very low risk loan, government insured, a non-recourse loan. And we're going to discuss many of these points as we go on here. Funds are non-taxed, meaning that any funds you receive from a reverse mortgage are not taxable money. You can use the funds however you choose. You can use it for anything, any purpose you want. There's no ever There's never a prepayment penalty on this type of a loan. You can pay it off anytime you want. There's no penalties involved with it. There's a line of credit option that's available that's guaranteed to grow over the life of the loan. When the loan does become due, the homeowner, the estate, they'll never owe more than what the home value is. We'll discuss that a little bit more in the coming slides, but any remaining equity that's there after the loan balance is paid off is there for the estate. So heirs may retain the home, and the heirs can actually, take or buy the home or pay the loan off, loan balance, or 95% of that appraised value of the home. So what are some common uses of a reverse mortgage? The biggest one I see is over my years of doing this is eliminating a mortgage payment. And when you eliminate a mortgage payment, whatever your mortgage payment is, whether it's $200 a month, or I've had some clients that are $1,800 a month. What that does is it creates instant cash flow. In other words, you won't have a mortgage payment with a reverse mortgage. So thus you're paying off your current mortgage, and that current mortgage payment that you have is now cash flow in your account that you can use for anything you want. Then there's the line of credit that many of my clients over the years have used the line of credit option as kind of an emergency fund type of option, or just something they can go to on a somewhat regular basis. And there is a product available within the reverse mortgage now today that you can purchase a home without spending all your assets. In other words, going to your financial advisor and using some of those assets to purchase your next home. And so we'll talk about more about what the reverse mortgage for purchase is all about. So common uses: consolidating debt or paying off other debt. I do have clients that will pay off their mortgage with a reverse mortgage, provided they have the equity available to them to do that. And anything remaining left over, what's available to them, sometimes they'll pay off other debts. When you pay off other debts, obviously that's creating more cash flow for yourself. They can use the reverse mortgages to supplement any monthly income they have currently right now. Many clients over the years that I've visited with, they don't have a lot of assets. So they would like to supplement their current Social Security and have a little bit more money. Retirement planning tool. Today, more today than ever before, the reverse mortgage or your home can be considered part of your retirement plan. And there's many studies that have been done on this product that can enhance your retirement by utilizing home equity. So it is a retirement planning tool today. I have many clients that have actually used the reverse mortgage to remodel their home, maintain their home because they want to live there. That's the main purpose for reverse mortgages, to keep people in their homes, and sometimes they want to make improvements to their home, whatever that improvement may be. And increasingly, healthcare costs and prescription drugs, obviously those costs aren't really going down. And long-term care and in-home care. I do have clients that have over the years have used the reverse mortgage funds to help them for staying in their home. Create a cash reserve for emergencies. I have a number of clients that have used that as well. They'll just have that line of credit available to them for whenever there is an emergency they need some money to get to, for whatever emergency it is or whatever reason it is. I've also had clients that have used the money. Like I said, you can use it for anything you want. So they've used the money for travel. They've never been able to travel. And because they haven't had the money to travel to go see family or to go see relatives, whatever it is, they've used the money to do a little bit more traveling that they ever have. And recreation. I've got stories on recreation. I've got many stories about both travel and recreation. And the other is purchasing a home. Since 2009, when this came available, the reverse for purchase, I've had many clients that have downsized. They've moved closer to family. They've moved to a community that they'd rather live in, or maybe an area town, or something that was more senior friendly to them. They've moved to. So these are all common uses, and there could be many more. But quite simply, what is a reverse mortgage? And a reverse mortgage is designed for senior homeowners 62 and older. At least one borrower has to be 62, that they can access a portion of the equity in their home without having a monthly mortgage payment. So you have to be 62 or older, and you can utilize a portion of that equity. You're not going to get 100% of the equity, but you're going to get a portion of it. So eligibility, how it works. There again, you got to be 62. It has to be your primary residence. You can't do it on a home that's your second home that's in Arizona or wherever it may be, if you have one. It can't be done on a farm. It has to be your primary residence. Financial assessment is involved. Financial assessment is where we now, as of about 10 years ago, we look at how you pay your bills. In other words, do you pay your property taxes on time, your homeowner's insurance on time? We look at your income now, and all we're doing is looking at your capability, your willingness and capacity to basically maintain taxes and insurance going forward on this loan. Your responsibility, like I said, is it has to be considered your primary residence. So in other words, by definition, that's 6 months. You need to pay your property taxes, homeowners insurance, and your HOA or homeowners association if you're in a condo, and maintain the property. So if you do those 3 things, or 4 things, if you include HOA, if you do those 3 things, you can live in that home and have a reverse mortgage for as long as you wish. Benefit determined by age of the youngest borrower on title, the appraised value of the home, which is done by a certified FHA appraiser, and the current interest rate. And of course, the product that's chosen by the borrower. So age, value, and interest rate is what we look at. That's the FHA formula. So wherever you go with a reverse mortgage, whether it's lender A, B, or C, they're all going off the same formula. Receiving the benefits. Basically, there's 3 and a combination of all these benefits. How you can receive the benefit, that is. You can receive it in a lump sum payout. Okay. Today, you won't get a full lump sum. You're only going to get 60% of that. It's called the 60-40 rule today. Thus, because of that new regulation involved, you rarely will see anybody take out a lump sum anymore, because you're not going to get access to the full amount that's available to you. You can take a monthly payment out of this, or what they call a 10-year payment. 10-year means that payment is guaranteed to you as long as at least one of the borrowers is living in the home. So if you're living in the home to age 100, you're guaranteed to receive this payment. If you're living in the home to age 150, you're guaranteed to receive this payment, as long as at least one of the borrowers is there alive and living in the home and it's their primary residence. And the next option is a line of credit, which is very common. Clients will take a line of credit that's available to them to use whenever they feel they need money. Like I mentioned before, the emergency fund, whatever you want to call this line of credit, it's there for you to use whenever you feel you need some money. A lot of clients I've dealt with have used it 2 times a year, September and March. And I'm guessing you probably understand that September and March are property tax times. So they'll use this to pay their property taxes. And And basically the fourth option on how you can receive the benefits is a combination of these. So I have some clients that have taken a partial amount in a line of credit and then a partial amount as a monthly income. So in other words, the receiving the benefits from this and how you receive it is very versatile, and you're not locked into using the line of credit only as long as you have your reverse mortgage. You can switch to a monthly income, down the road if you wish. So consumer safeguards. Borrowers are protected by a wide range of safeguards, making the HECM the safest and most regulated HUD mortgage available. Okay, this is the most regulated and safest mortgage product out there because of who it's for. And they've done a lot of changes in the past 5 to 10 years on this product to make it even more safe than it was before. And it was before as well, but now it's even safer, and because HUD is looking at the future, and the future is home equity. They want clients to continue to have this product available to them for the future. So HECMs are non-recourse. The homeowner retains title to the home as long as all the loan terms are met. And if you remember from the slide before, the loan terms is you pay your taxes, your insurance, you maintain the property, and it has to be your primary residence. So those are the loan terms essentially. Homeowner's estate is entitled to the remaining equity in the home. So in the end, the estate could very well have that remaining equity available to them. And third-party counseling is a mandatory prior to every applicant actually taking out an application. So prior to taking out an application, the client, after visiting with a lender such as myself, would have to go through the counseling if they want to go forward. And that counseling is involved with a HUD certified reverse mortgage counselor that is visiting with you for about 60 minutes, explaining what reverse mortgage is again with you, asking you questions to make sure you do understand what the product is. So they are gauging if you are understanding this. And then in the end, they are giving you a certificate that says, yes, you have passed, yes, you have gone through counseling, and now it's up to you whether you want to go forward or not with whoever your lender is. So third-party counseling is a requirement. That's always been there. Equity line cannot be canceled. So that line of credit that's available as an option cannot be canceled, frozen, or reduced. Unlike if you went to your local bank and got a home equity loan or a line of credit against your house, those three things can happen. That lender can cancel that line of credit, that they can freeze it, and they can reduce it. However, within the line of credit with a reverse mortgage, that it will not happen. And the line of credit grows regardless of home value. So that line of credit is actually contractually there to grow based on the interest rate and based on your age. So that will continue to grow. So let's talk about some myths and facts involved that are out there. And I've seen all these myths. So the first big one that I run into all the time: the lender is on title and owns the home. I hear this all the time. Oh yeah, that's the loan where the bank takes my home and I can get an income from it. And I'll ask a client, where did you hear that? Where did you hear that information? Well, I heard it from Helen or Fred or John at the bank or whoever. That is completely not true. And I would venture to guess, in fact, I don't have to guess, that these other people don't understand what the product is and never investigated it. So the most important thing about this product in the end, what I tell people is become educated. Visit with somebody that knows what a reverse mortgage is. So the borrower is never giving up title. they're never giving up title. All there is a lien out against the home, just like any other loan against the house. So it's always your home. You can do with that home however you please. So myth number 2 is the funds received from the reverse mortgage are taxed. That is 100% not true. Any funds you receive from a reverse mortgage, whether it's a monthly basis, a line of credit, or a lump sum, those funds are not taxed. Now, I will put an asterisk to that as well, is that if you take that money and invest it, which we'd never recommend, if you took it and invested it and you have a gain from that investment, that's potentially good. That's obviously going to be taxed probably. But when it comes to that, if somebody tells me that we're going to use the money to invest at Mutual of Omaha, we're going to walk away from it because we are not going to get involved with somebody that plans to invest the money. That's a no-no. In fact, it's better to leave it within the reverse mortgage anyway. So they are not taxed funds. Non-taxable retirement income is what it is. So myth number 3 is reverse mortgages are risky and funds are not guaranteed if something happens to the lender. That is completely not true. The HECM came into place in 1988 through the Reagan years. Prior to that, it was never regulated. It wasn't an FHA product. So yeah, something negative could have happened in those prior years. I don't know, but it's, like I said before, it's the most regulated product out there, FHA insured. The HECM is not a proprietary product by the lender. In other words, this is not a specific loan that's designed by, for an example, Mutual of Omaha or Tom Selleck, for example. This is an FHA loan. So FHA writes the rules on this particular loan. So it is not a risky loan. Myth number 4, the borrower can end up owing more than what the home is worth. So first of all, this is a non-recourse loan. The loan is not secured by any assets other than the home. So the only recourse for the lender in the end, other than the borrower or the estate selling the home, is the home. So I tell clients all the time, if you had thousands of dollars, millions of dollars in your bank account, and you passed away, and then if for some reason that the loan is upside down, in other words, you've outlived the loan now, the lender can't come after those assets that are outside of the home. That's for your estate. The lender, obviously, the only recourse is the house. That's it. So myth number 5 is when the reverse mortgage becomes due, either the lender takes or sells the home or the heirs lose their inheritance. That's not true. Not at all. When the last remaining borrower passes away, based on the will of the borrowers, it naturally goes to the estate. The estate at that point in time have 2 options. Do they want the home? And if they want the home, they simply pay off the balance, however means they have. And if they don't want the home, what do you think they'll do? They will go out and find their favorite realtor. The realtor will sell the home, pay off the balance. Through the sale, it pays off the balance, and that positive difference goes to the estate, always. It doesn't go to the lender. Yes, the lender gets paid off, and the difference then goes to the estate. Myth number 6 is if a borrower outlives their life expectancy, the lender will kick them out of the home. Completely not true. I've actually had a local bank in Iowa that actually told a potential borrower of a reverse mortgage. Actually, the borrower ended up taking out a reverse mortgage. But this borrower went to his bank, and this borrower had been educated by myself and others, and went to the bank to ask him questions about reverse mortgage, and the bank told him this, that at 10 years that the bank, or that the reverse mortgage company, was going to kick him out. And the borrower, potential borrower, knew very well that was not true. So no, you can live in that home provided you do those three things: is pay your taxes, pay your homeowner's insurance, maintain the property, and that it's your primary residence. You do that, like I said before, you can live in that home for as long as you wish. No one's going to kick you out. Myth number 7 is you can never get out of the reverse mortgage. I've had clients say this too, that they've heard that, okay, once you do a reverse mortgage, you're stuck with this for life. And that is not true as well. Simply take the word reverse out of this, and it says mortgage, right? So, and many of us, if not all of us, have had a mortgage. At any point in time with a mortgage, you can decide, I don't want to live here anymore. And what would you do? You would sell the home, and which then pays off your mortgage, and then you take your positive difference and you go on your way. It's no different with a reverse mortgage. There's never a prepayment penalty if you pay this off early. So that comment is that you're stuck with a reverse mortgage with life and can never move is completely false. So myth number 8 is the reverse mortgage can impact my Social Security and Medicare benefits. That is not true. It does not affect your Social Security or Medicare benefits at all. Remember, this is a loan. This is loan proceeds. They cannot tax loan proceeds. It does not affect Medicare and Social Security. However, if you're on Medicaid or any needs-based program, this could potentially affect your benefit. And what I typically tell clients is if they're on Medicaid or some need-based program, is talk to your counselor about your benefit. And within the reverse mortgage and how you choose the money, you can actually have a reverse mortgage and still be on Medicaid or some other need-based program and still keep your benefit by utilizing it via a line of credit, for an example, or a monthly income that keeps you underneath your threshold. But by all means, you visit with your counselor to verify what your benefit is and how you work with that. So today, or not today, well, today, yes, but since 2009, clients have been able to use a reverse mortgage and purchase a home all in one transaction. We call it a heck 'em for purchase at Mutual of Omaha. Assisting borrowers in downsizing. I have clients that downsize from their big homes that they no longer have a need for. They move closer to their family. I have clients that have moved from out of state that have moved closer to their family and moving to a more desirable community. I've witnessed all of this. So I've been doing it since 2009. And the most attractive thing to clients when they learn of this heck 'em for purchase product is, number one, it gives them a significantly increase in their purchasing power. For an example, with a heck 'em for purchase, we look at the age, value, and interest rate based on what you're trying to purchase. So given that, and say you are, the reverse for purchase is going to give you access to 50% of that value. That means, for an example, if you sell your home for $200,000, your purchasing power is $400,000 home. Does that mean you have to go out and buy a $400,000 home? No, you don't. I have many clients that will sell their home, for example, a $200,000 home now, and then they'll go out and they'll find another $200,000 home. So when they buy that $200,000 home, all they have to put down is roughly 50%. Now that percent can go up or down a little bit depending on their age, but by utilizing the HECM for purchase, they can actually significantly reduce out-of-pocket expenses and increase cash flow. Increase their cash flow by, number one, not having a house payment. Number two, in that example of a $200,000 home, they only put 100 down. That means they take another 100 of that sale and put it into their savings or their retirement fund. So they're keeping liquid assets available for other uses. They're eliminating monthly mortgage payments rather than purchasing a home the traditional way and maybe having to have a mortgage payment. So this is a very popular product for those that will understand it. Understand that I'd like to keep my money in my asset accounts. And so as we go, you can reach out to me. I'm going to have my information on one of the next slides here. You can reach out to me. I've been doing this for 16 years. Since 2000, I've been involved with it, 5 years as a counselor, so for a total of since 2000. So by visiting and getting educated, which there's no cost to get educated on this, no one ever pays a penny to me to get educated, to learn, am I eligible to do a reverse mortgage? So I can pre-qualify you that way. How much money could I actually get based on my home value and my age, et cetera? I give you a quote if you want a quote. What terms and rates are available? I give you many options that are available. And can I use this reverse mortgage to purchase a home? You know, I'm thinking about maybe moving to a different community or downsizing. You know, what's my buying power? So I can answer all these questions and educate you on what it is. And I also educate you on where the counseling is done as well. I give you a complete list of many counselors that you can go visit with. So in the end, this is what a reverse mortgage is. And I do this mainly face-to-face with clients. Many clients don't want to talk over the phone. And if they want to talk over the phone and they don't want to see my face, that's fine too. That's okay. But many clients want to do this at their kitchen table. And that's what I do. So there's my information. By the way, I'm not located in Des Moines, but I do cover all of Iowa. I am licensed in Iowa and I do travel all over the place. So with that, are there any questions?
You know, right now, it doesn't look like we have anything coming in. Your presentation may have been just too thorough. You know, you got a lot of the questions probably out of there with those myths, but Scott, I think I do see something coming in here.
We do have a question. I tell you what, we'll have Alan answer this one, and then we'll move on to John's portion. And then if there's any other questions at the end, then we'll get to those. So somebody says, have a reverse mortgage on my home and need to keep, then I need to go to assisted living. Can I keep the home and rent it?
No, you cannot. Once it's no longer if you're the last remaining borrower in the home, and if you go to another home and it's now your primary residence as in assisted living, at that point, the assisted living is now your primary residence, and this can only be on your primary residence. So you have, once you can go to, for an example, let's say, for an example, you go to the nursing home because you're there to rehabilitate, something. So if you're in the nursing home 6 weeks or 6 months and then come back home, you're perfectly fine. But if you're there more than 12 consecutive months, now that new residence that you're at is now your primary home. So the reverse mortgage, it has to be satisfied, and you've got 12 months to satisfy that loan.
Okay, sounds good. There is a follow-up question, but get to that after John's portion of the presentation.
Yeah, and just a reminder, folks, if you do have questions, Q&A chat. We also have this streaming live on the Johnson County Social Services Facebook page, and thanks to our friends over at Heritage Area Agency on Aging, they are streaming this live over there as well. So I'll be watching to make sure questions don't pop up there as well. But without further ado, we'll turn it over to John Gianola, the managing attorney over at Iowa Legal Aid.
Thank you very much. I appreciate it. And again, my name is John Gianola. I'm a managing attorney at Iowa Legal Aid. I just want to bring everyone's attention to Iowa Legal Aid's hotline for older Iowans. It's a free service to seniors in Iowa who are 60 years and older. If you have a legal issue or problem, it's a free service you can call, and non-criminal in nature. You can call our hotline. It's 800-992-8161 and talk to an attorney and get some legal help on your issue. So my presentation, it's going to be skewed only because people who have a reverse mortgage issues are not calling our hotline for older Iowans to brag about how great it is for them. We obviously deal with people who have legal problems, and so this is just going to be skewed toward the issues that we see for people who have run into problems or with reverse mortgages that kind of, and some of it is just their own fault for not maybe paying attention to the housing counseling that they got and getting a reverse mortgage. And it's also skewed, I would say, toward primarily the people that we've seen, seniors who have issues with reverse mortgages, tend to be more limited income. And so I just want to put that out there. This isn't supposed to be a broad beware of reverse mortgages for these issues. These are just kind of issues that we have seen in dealing with clients who've contacted us about issues with the reverse mortgages. So kind of factors to consider, and this is going to be a short presentation. The overarching thing I'm going to say is that, and as Alan said, it's required to get counseling, housing counseling from a HUD certified counselor when you do a HECM mortgage, a home equity conversion mortgage, which, by the way, should be the only reverse mortgage product that you consider for all the reasons that Alan said. That's very critical. But in our experience, I think people need to go beyond the HUD counseling and kind of look at reverse mortgages as part of your financial planning as you age. And that probably requires a good certified financial advisor to kind of like look at all your options, crunch the numbers, really consider what makes the most financial sense for your future. So, some of the, probably the primary thing that we would say is the factor considers aging in place. Do you want to remain in your home as you get older? And, and looking at reverse mortgages as a way to do that, but also probably looking at it as on the spectrum of things that you can consider. For example, maybe instead sell your home, realize equity, profit, and downsize. Obviously, you can even do that after you make a decision to do a reverse mortgage. So that's a good thing to know, but that's something you should consider. Refinancing, maybe if you're concerned about both maintaining equity in your home and reducing your monthly mortgage payment, you might want to look at refinancing as an option as well. Do your research on that. And again, once you look at all those options, get all the information, talking to a financial advisor to crunch all those numbers for you and figure out what makes the most sense for your goals and objectives. Other thing I would mention is when we are all relatively Pollyannish when we think about our futures, and we may be very emotionally attached to our homes. But when I was in a legal aid attorney in California several years ago, the state did a survey of convalescent homes. And it was shocking to know that up to 70% of residents in convalescent homes were there for no better reason that their homes were not accessible to return to. The stairs were a barrier, or doorways were not wide enough because now they had a need of a wheelchair or a walker, or the bathroom was not something that they could use because of there was no zero step to get into a shower or a bathtub. Those are things that you want to consider too as you age in place. And again, a reverse mortgage may help you as you age and you need those kinds of repairs and renovations, could potentially help you with that too. But that's something I would say, think about as you're thinking, as you make decisions and plans about remaining in your home. Most of us, as we age, may encounter like some physical ailments or disabilities that may affect our mobility. So that's something important to think about. Loss of equity, that's already been talked about. You know, if you're okay with a reverse mortgage and using that equity for more immediate needs and payments, and you know, potentially when you pass away and you want to leave something for your kids, potentially there may not be that equity there when the loan becomes due, and that's okay. But you just need to understand that going into it. Upfront costs with reverse mortgages, you want to know exactly what that is. And Alan, when he would be upfront with you, when you meet with him, the HUD housing counselors, kind of understanding what all the upfront costs are with the reverse mortgage. And again, talking not only to a HUD certified counselor, but also talking to your financial advisor about, does this make sense with considering my plans for this home, crunching those numbers and figuring out, do these costs, you can either pay those costs out of your own pocket, or they could be wrapped up into the reverse mortgage loan itself. But again, we're just putting that out there as factors to consider when you are purchasing your home and getting appropriate counseling for it. Income, the reverse mortgages can definitely supplement your income, but you still, again, getting proper financial advice about, will you have enough income with your reverse mortgage to afford ongoing maintenance costs, property taxes, and insurance. In our experience, reverse mortgages, especially people with limited incomes, is not a substitute for limited income. It can definitely supplement, but you really need to think about that carefully. We definitely have clients who run into problems with maintaining their homes, with repair costs and other property taxes and so forth, because of very limited income. We do occasionally get people who contact us about, looking into getting a reverse mortgage as a way to supplement their income, to stave off claiming Social Security benefits too early, wanting to get the maximum Social Security benefits. Whether that makes financial sense or not, I'm just putting it out there as something, again, that you would want to talk to. If that is part of your motivation, really talk to a counselor about that. I'm sure Alan will have some real hard numbers to give you too, if you ever talk to him about considering a reverse mortgage. But we do occasionally get that, and that's, again, something that should be part of your financial planning and talking to a financial advisor. So obstacles you want to really think about. Will the reverse mortgage help overcome obstacles to remain in my home? And none of this is new. Alan talked about it. Reverse mortgages are great if you can't afford your current mortgage, and a reverse mortgage can pay that off, really free up money to make it feasible to stay in your home. Major repair needs, you're staring down a $10,000, $15,000 roof repair or a new furnace or something. Reverse mortgage may provide necessary funds for needed repairs without increasing monthly expenses. Those are two really excellent reasons where a reverse mortgage can overcome obstacles to aging in place or remaining in your home. So kind of some of the pitfalls, again, what we've seen from people contact us is, we caution against using reverse mortgage too much revenue as fun money, like buying a big expensive boat or a expensive trip around the world or something like that. You may not have sufficient funds with your income and reverse mortgage revenue to plan for future needs for your home. You really need to continually think about that. Like, will I have enough funds to pay for maintenance costs, to afford property taxes, the insurance, those kinds of things about your home. So be very careful about that. Very conservatively thinking, if you're so inclined, is to really use that reverse mortgage to plan for future needs to remain in your home. It's not to mean that you can't use it to do other things, to really enjoy things that you weren't able to do before retirement, but to really caution against really using the money as a boondoggle and really kind of blowing through those funds too quickly and prematurely spending down the equity in your home. And Alan kind of mentioned this, is if you're on a needs-based program such as SSI and Medicaid, and it isn't that uncommon for us to have clients who are on those programs with reverse mortgages, it doesn't count against income limits because it is a loan. But if you don't spend that money down, you get it in a lump sum, for example, or you save that money, it may count against the asset limits for those programs. So if you have questions about that, again, contacting our hotline for older Iowans to ask specific questions about how reverse mortgage proceeds may be impacting your eligibility for those programs is probably a good idea. And Alan mentioned this a number of times, but this is the #1 major problem we run into is property tax suspensions. Low-income Iowans may be eligible to have their property taxes suspended by the county in which they live, especially those who are in SSI. And some agencies in the state have really aggressively pushed this for lower income elderly households with all good intentions, but not understanding the risk to those who may have reverse mortgages. And this is something we unfortunately have seen several times where property taxes are suspended. That does not mean that the property taxes are not owed. They are merely suspended. They will accrue as a lien against the home. It has priority over the reverse mortgage, and it is against the terms of the reverse mortgage. You have to pay the property taxes. And what often happens is it may be years without paying property taxes that the mortgage company finally gets at it. They may pay the property taxes and then find you in default of the mortgage. And that leads to a foreclosure. And sometimes when the clients have contacted us and they got the default notice, they're sometimes tens of thousands of dollars behind in unpaid property taxes. So that's a big no. Do not go, if you're going to get a reverse mortgage, do not apply for a property tax suspension. That those property taxes have to be paid. With that said, do apply for any available property tax credit, which may reduce your property tax. And that's a good thing. That will also free up some money for you and be a good thing. So if you want information about eligibility for property tax credit and want more information about that, again, contact our hotline for older Iowans and you can get some information on that. That's all I have is a brief presentation because I think Alan went over did a very excellent presentation on all the benefits and ins and outs of the reverse mortgages, but we just kind of wanted to point out some of the pitfalls and issues that we've seen. And Alan, I can invite you to kind of chime in on anything that I mentioned that I might have missed or want to emphasize or comment on.
Yeah, when it comes to suspension, yeah, that's a big no-no if you have a reverse. Even if one has a suspension right now and they're wanting to get a reverse, that would have to come out of suspension and go from there. So, and we do underwrite, as of about, like I say, 8-10 years ago, we want no one can get a reverse mortgage unless they've showed us via their credit and paying taxes and insurance that they've showed the capacity to maintain that. And so, however, there are some clients that there has to be a mandatory escrow. It's a small percentage, but we do have a mandatory escrow if they have not shown that they've paid their taxes on time. When it comes to, you mentioned, yeah, most of the people I talk to in Iowa aren't going to go out and buy an expensive boat. Iowans are pretty frugal for the most part. And then when it comes to, you mentioned your financial planner, if you have one, by all means, seek out a financial planner. Many of the clients that come to me have come directly from their financial planner because they're using this in concert with everything else they have. And by all means, tax-free money is better. It's been proven by the financial planning world that using home equity in retirement can enhance your retirement plan. Because I talked about one of the L's, and that one big L is longevity. We are all living longer. Well, I wouldn't say all, but our numbers or the percentages are greater today than ever before, that you're going to live quite a lengthy life, and no one wants to outlive their income. And so by having access to all the means available to you is beneficial. But in the end, I tell clients I ask clients, like you mentioned here, if you want to stay in your home, for at least 2 years, then the reverse mortgage is an option for you. If you're going to stay in your home for less than 2 years, if you have a goal to leaving that home, then there's no point in talking to me. There's a different product or what have you. And also, we're looking at your income quite to make sure you can maintain the property. So there again, it's extremely highly regulated. And I've had a number of experiences throughout my 16 years on the lending side.
I would just add that during the pandemic, like a lot of the other FHA loans, there were protections for people with HECM loans in terms of like forbearance for, if you couldn't pay your property taxes or afford your property taxes, that's where the regulation was really beneficial. That would not have been available to people who fell into some financial crisis during the pandemic. So just throwing that out there is like this, there was, that's where having an FHA regulated loan, another example of where it really was beneficial, especially during this time. And property taxes in Iowa are no joke. When I moved from California, I moved to a home that was about half the value of my home in California, but I paid twice as much in property taxes in Iowa. So, so property taxes are a big issue to pay attention to. And unfortunately, like I said, that's probably the number one problem that we've run into. And that's really from just people just not either, just not paying attention to what they were counseled when they got the loan, because I'm sure that is just probably told to them in housing counselor by the lenders, et cetera. And it's just surprising that people still kind of have fallen into that problem.
Yeah. What I tell clients in the beginning, no matter what, is the most important thing with this product is education. Some people will understand it right away, and some people it will take 2 or 3 times for them to understand it. And that's why you seek out family or a certified financial planner to be a part of it. But in the end, it's all about education. And you'd be surprised on how many professionals, financial advisors or attorneys think they know what this is and they don't. So I see that all the time. So
Hey, Alan, you just mentioned the importance of maintaining property, which gets back to a question from earlier. So can you talk to us a little bit about what happens if you are unable to maintain the property?
maintaining the property, first, I tell every client as well, there is no property reverse mortgage police running around looking at houses. And how that usually comes about is usually from the city, town, what have you, that you're living in. Maybe a neighbor or somebody is getting tired of your house looking bad. You're not mowing your yard, it's a foot tall, or a tree fell on your roof, et cetera, et cetera. So usually it happens that way, that someone finds out that you have a lien on your property. The lien is with this lender. They contact the lender, and the lender then contacts you and say, hey, what's going on? So typically people with a mortgage and they want to live in their home are going to maintain the property anyway. They typically do. It's rare that happens. But yes, it could happen.
All right, thanks, Alan. At the moment, we don't have any further questions.
I saw Lorraine has a question, and can you refinance or reverse mortgage?
Oh, there we go.
Can you refinance? Can you? And these are called HECMs, home equity conversion mortgage. So yes, you can refinance, and it's called HECM to HECM. And in Iowa, traditionally, the only way that could happen is if you saw a lot of appreciation in the home. And if the interest rates are favorable and you have appreciation, and of course so the perfect world has kind of aligned here in the last year and a half to 2 years, where appreciation is there. In some areas, the appreciation is quite good. In Lorraine's community, in Iowa City or whatever metropolitan area, you see a tremendous amount of appreciation. And so there is a potential opportunity where you can refinance and still get more money out. And I've been able to do that for a number of clients that have seen a lot of appreciation. And when you do that, the cost is less. But you still go through the same parameters, and we still underwrite, we still verify that you're paying your taxes and insurance, all of that. And you do have to meet a minimum requirement by HUD in order to do it. So there are protections is that you can't do it unless HUD says, okay, you do qualify based on the amount that's available to you and based on the cost. So there's a cost and a benefit requirement that we have to meet in order that the client and or us is in order to do a HECM for HECM. So yes, that's potentially there. And so yeah, we look at the balance. We look at the value of the home today, and also your age, which you're older, and you can't do it within 12 months. So if you have a reverse mortgage and you're going to refi, you can't do it inside of 12 months. It's got to be greater than 12 months. Does that answer your question, Lorraine?
Yes. And speaking as the realtor, I'm kind of curious if you use the funds for a major remodel so you can stay in your home, but you also needed money so you can meet your monthly obligations. So would you come in and reappraise the home, but you'd have to wait the 12 months?
No, we wouldn't. If someone's going to make improvements to their home with the reverse mortgage money, they're doing that because they want to, or they need to, or whatever that is. If this is a year, 2, 3 down the road, and there again, we have appreciation like today, and because they did make improvements, that's up for an appraiser to decide, for a real estate agent to say, hey, you know what? Your home is worth more now,
Mm,
quite a bit more now based on the market. If that's true, and some of that could be true because of, the other factors I mentioned, some of it could be true because you did make improvements. If that's all true, then that's a benefit.
okay. Thank you.
There, I was muted. I don't see any additional questions for either of you right now, but I really wanted to thank you, John. Thank you, Alan, for your presentations, for providing this information. It's very valuable information for anybody considering a HECM reverse mortgage. Lorraine, big thanks for getting these two to be here today. Always big thank you to Scott Hawes, our chair of the Housing Action Team, the Johnson County Livable Communities, who's the group that puts this on, and Scott for being on all these to help out with questions that come up. And really thanks again to all the viewers, whether you're watching this live, watching this later on. Feel free to watch the whole series. In fact, there is a great way to watch the whole series. I just put it in the chat there. We have this video collection on the Livable Community website through Johnson County. We also have a YouTube channel, Johnson County Social Services YouTube channel. You got to stay with the times. So you can watch this and any of the other that we've done this year or potentially in the past as well. So once again, thank you all, John, Alan, really appreciate your time today and all of your information.
Thank you.
Thank you so much. You guys were amazing.
Thank you, Lorraine.